Well, markets clearly have recovered and retraced, and that is a clear indication and endorsement of what markets are really perceiving the change of guard at RBI will do to markets. Now, there was a knee-jerk reaction, but the knee-jerk reaction really lasted for about 4 or 5 minutes. Rather than Brexit, everybody is focusing on Brexit, and the talking point or the center stage, instead of talking about local issues now, clearly is now once again with global issues. Manish Chokhani joins us, needs no introduction, seasoned investor. Amazing maturity by the market.
Yes, I think so. And in fact, when I agreed to come, I thought the market will be in a lot more knee-jerk panic reaction. I think people have handled it very well. That actually in a bull market, you take events like this as climbing the wall of worries. Markets don't like discontinuity, so it was expected that people would be a bit uncertain. But having said that, the proof of the pudding is that the nation, institutions, markets are bigger than individuals. And I've seen this across cycles. So if you even look at companies, I mean, after Mr. Narayan Murthy or after Nandan Nilekani, you could have written of Infosys, and you have a Vishal Sikka today. Similarly, there's another rockstar governor in Britain, Mark Carney, who was called over from Canada, in fact. And no one mentions him because it's about the politics of Brexit and what that's going to do to the European Union. So it's good that we've not overemphasized an individual. And given that Dr. Rajan's done a really good job, it would be injustice if we were to say the RBI falls apart after him, because that would be saying he was not a good governor. So the fact that he's leaving it, and he's still not gone, he's still 3 months more to go, is a sign that people respect the institution. And take the last 5 governors, Dr. Rangarajan, Dr. Bimal Jalan, Dr. Y.V. Reddy, then Dr. Subba Rao, and then Dr. Rajan, all fantastic leaders. So there's no dearth of talent in our country. And I don't think we should have been worried, and I'm very glad the market has reacted the way it has.
The general concern is that this will lead to uncertainty, and whoever the next governor would be, there would be a time period before market would assess the credibility factor. So there is a vacuum now. It could be 3 months, it could be 6 months, that you don't know what the central banker is thinking.
So that would happen irrespective. Let's say the current governor would have had a 3-year extension. 3 years later, you would face the same situation, that there's uncertainty. When he came in, he was an unknown quantity. He had not run anything before, and he came out with flying colors at the time of the crisis when he took over. So no reason to believe that there's nobody in this country who can come and take over. We've had professors in the past, Dr. Kaushik Basu, who came and then who went back to Cornell. He's going back. There's already Dr. Arvind Subramaniam, in the current administration as well. So I'm sure we'll have someone good to look forward to.
Well, leadership does matter, and
of
again,
course.
the examples which you gave, I can throw in some more examples. Sure. And TCS with Mr. Ramadurai with Chandra. Right. So that's a clear example that how leadership really matter. And leadership at a central bank level is also a process of thought process. Are you dovish? Are you hawkish? What is your understanding of global economy also?
Again, like I'm saying, there is no shortage of people with the credentials, and end of the day, the leaders have been economists. They are not really what you call CEOs or politicians in that sense, who will lead large empires. They have to provide thought leadership, which is why they are there where they are. And again, like I say, already you all have, in fact, in your sister publication, published 7 or 8 names, each of them who have fabulous credentials. So I would not be so worried.
A lot of equity market participants I've spoken to, they also have a contra view, and the contra view is that Mr. Rajan was criticized for not cutting down interest rates. Yes. Now maybe the next governor could be slightly easy on cutting down interest rates, and typically markets can handle everything. What they can't handle is the interest rate regime. So do you think now the interest rate regime could get reset?
See, Nikunj, there are 2 primary schools in economics. So one is the Keynesian school, which is demand and stimulus, which is what governments love. And then there's the monetarist school, which is very strident, and the most strident end is, of course, the Austrian school, which Dr. Mark Faber talks about a lot, which is that money is the root of all evil. I think given the global backdrop, we were acting like the classical monetarist economists, where we were saying if we hold back money, we can solve inflation, which was really a global phenomena, a commodity-driven phenomena. I'm not in the camp, and again, I'm not an economist, but this is just my view. That by keeping rates high in India, we were not really killing agricultural inflation. And on the contrary, it may have contributed to creating a deficit on supply on manufacturing side. Maybe it changes. And like I said, there are 2 schools. Maybe the next governor is from the Keynesian school, where the whole world is in Keynesian camp, whether it's China, whether it's US, whether it's Japan. They are all in stimulus mode. And we were pulling the throttle back over here. At one point, you could argue that when $15 trillion in the world is at negative interest rates, how do you expect someone in India to compete with a 7-8% real interest rate? The government tenure was at 7.5%, 8%, which means people were borrowing in high double digits. Maybe the regime changes. The point you made earlier about markets not liking uncertainty is discontinuity. I think once you know what the new person and the new administration is trying to do, and you fall into that slot, markets discount very, very quickly. We've seen that in change of regime. In 2004, when the then NDA government fell, the market was in a state of shock. Then it came back with the UPA 1. Then it went into sulk in UPA 2. Then it came into euphoria when the current NDA came. Then it gave up all the gains because of global factors. So it's really, end of the day, earnings matter. We've not had earnings, and therefore we are discussing interest rates and weather and Brexit. If we had earnings here, with the amount of money in the world, we would have been celebrating this bull market long ago, and we wouldn't have been discussing individuals.
But markets, surprisingly, they managed to climb the wall of worry.
Yeah.
I mean, we like it, we may not like it. This is a worry. The uncertainty is a worry, and market reaction is
right.
very mature. Brexit, another concern. So, do you think the internal strength in market is quite amazing?
I think market is really signaling that we are coming into an economic recovery process. The monsoons hopefully are good. Hopefully the pay commission money starts finding its way into pockets of state government employees and others. Hopefully the earnings cycle now starts recovering because we started consuming a lot of our capacity. And like I said, this high interest rate regime and the political uncertainty was holding back people from making investments. As those clouds are sort of going behind us, and you look ahead to unit volume growth actually will happen in India, I think markets are clearly focused on that. And the way the cyclical trade has already started moving, whether it is financials, whether it is autos, consumer durables, is suggesting markets clearly looking ahead now.
So it's like Monday morning I wake up to a bad dream and that bad dream is over.
Well, not a bad dream. It's it's certainly sad when you lose someone of this caliber, but you must respect. And like I said, he might go back and influence the world today because he was at the IMF.
Yes.
When he goes back, maybe he comes up with this theory of what this whole global stimulus means and how it gets resolved. And maybe we are beneficiaries of that as well eventually. So one should look at the brighter side of the picture rather than just wallow in self-pity.
Okay, so I'm going to take the clock forward. Today it's Monday.
Right.
Friday, the outcome of Brexit would be out. So what do you think we could be discussing on Friday?
Brexit, again, like we spoke in the previous show, is more about what happens to the euro and the European Union. Because UK per se is not really that significant an economy anymore. It matters to financial markets because that's the intermediary trade for currency markets and for financial flows. But standalone, I don't think we care that much about what happens to sterling. Does it signal that Netherlands and then Germany and then Greece and Italy all say we are better off on our own? Because it is becoming a more isolationist, more tribal world where once you go ex-growth, people start looking for scapegoats and say it's the immigrant who's taking my jobs, it's these outsourcing fellows who are taking my jobs. So that movement is there across the world. That's what we have to guard against politically as well over here. That's what our central bank governor will have to look out for as well. That what is this competitive currency war playing out in the world? What are these competitive interest rates? If you're forcing people to lend at negative interest rates, what signal are you, giving savers in the rest of the world? So I think we will move on, and the events are about what is the handover in the world from this developed world to our part of the world now, which is clearly taking leadership. I don't think when I started in the markets 25 years ago, I would
It's
have
been
thought
25 years for you.
we'll be, yes, we'll be 7th or 8th largest economy in the world. And this is despite our currency literally collapsing. We are 70% down from the 2008 crisis. If only our currency were to appreciate, we get per capita income up, I think we'll be in for a real, what I call a fundamental driven bull market where the average citizen feels richer, not just the 4-5% guys who are owners of assets.
So let me get some closing comments from you and purely a market-driven question. Where do you think this economic cycle is in? I mean, are we in beginning of 2003, 2004 when earnings they surprised us, demand it surprised us, and what we saw ahead of us was a wonderful recovery in corporate performance. Are we there? Are we about to kickstart that new cycle?
So I draw the analogy not with 2003 onwards because we came out of this whole restructuring period of the TMT meltdown with Indian industry being restructured, and they hadn't really got any benefit other than the TMT sector for 4 or 5 years. So industry was very competitive, and then global liquidity was unleashed at an unprecedented scale, and we got literally 4-5 years of 40% CAGR without inflation. While we are not in an inflationary environment, I don't think this kind of liquidity unleashing can continue forever for the next 3, 4, 5 years. Therefore, it's more akin to the 1990s, the later period, when we went through the Asia crisis, the Latin America crisis, Soviet Union, and currencies readjusted. And if, I don't know if you all can pull out charts eventually and show, emerging market currencies had corrected by 60% at that time. So it's a long haul back where this will revert back to mean.
Okay.
I suspect, and I may be a lone person with this view, that the Indian rupee cannot be 67 when the world has printed literally $20 trillion over the last 7 years. Why on earth are we allowing ourselves to depreciate? We are a net importing country. Oil is a dumb commodity. Oil prices are down. Our currency should have appreciated. We are currently running a balance of payment surplus. We will attract a lot of inflows. We are not going to get competitive by inviting inflation into our country by continuously devaluing. We should be looking for a stronger currency. That's the only thing which will force people to become competitive. High interest rates will not force people to be competitive. They will go outside India and borrow. You need our currency to move up to get per capita income and therefore consumption cycle going back. But that may be a sort of lone view.
No, I mean, as of now, great ideas, they always turn out, they start very lone and then they become popular ideas.
Sure.
So really appreciate your time. Glad you could join us.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.